The Indian real estate market didn't really pick up until after the liberalization in the 90s.
Indians always purchased a home after retirement.
Mumbai is obviously by far the most expensive city in the country to buy real estate.
Mumbai has always been expensive.
Okay, so there's really no hope for rents and property prices in Mumbai to come down.
Mainland will get connected to the Trans Harbour link, so on and so forth.
Welcome to the 8th episode of the Indian Market Story. We're really pleased to have you join us today. We have a fantastic guest, Keyur Shah, who's a veteran real estate investor and who's going to be sharing his knowledge and experience of investing in the Indian real estate market for over 18 years. And we're hoping that, we're able to learn some new things and get some really unique insight into the real estate market. Thank you so much for coming on the podcast. Yeah,
Thanks, Warren.
Really appreciate you taking.
I'm there.
Really appreciate you taking time out of your day. And we're very, very excited to learn more about the Indian real estate market. It's something that's really important to the Indian market story overall, and we're very privileged to have an expert like yourself teach us about it. So do you want to sort of talk a little bit to the viewers about what your background in the real estate market is?
So I'm a chartered accountant. I started off my career in a consulting firm for over a decade. And then last 18 years, I have been with a private equity firm focused on real estate. Just in a nutshell, that's my background. So I've invested across all segments of real estate and have been doing that over the last 18 odd years, primarily in India. That's my background for you.
Nice. So you've got a really in-depth, long history with the Indian real estate market and really in-depth view of.
Yes, but market's dynamic. So I don't claim to be an expert. I am a student and always will remain one. But yeah, I'm learning and it's exciting times and which was even more exciting, I feel.
Of course. So why don't we start out with a little bit of the past to understand where we're going. And so a little bit of what I understood from my research is that the Indian real estate market didn't really pick up until after the liberalization in the 90s. And what I'd love to understand is why was that the case, and what was the real driver for growth, and what is going to continue being the driver for growth of the real estate market?
Sure. So see, historically, if you see, Indians always purchased a home after retirement because there were not enough avenues for financing available for consumers. HDFC, which is India's premier and even today the largest housing finance company, was set up in 1977. So post that, home loans became available for consumers, and that's how people could purchase a home. Earlier, people would purchase a home only post-retirement. You use their provident fund or retirement proceeds, take money from friends and family and buy a house. Mm-hmm. Over time, many more players entered the financing space, banks, NBFCs, etc. And with the availability of financing, real estate also improved, especially from a residential perspective. That's number one. Number two, over time, with income levels going up, the average age of the first-time home owner also started going down. Mm-hmm. So initially, if you say 70s, the people who average age of the home buyer would be 50s. Mm-hmm. But today, it would be in the late 20s or early 30s. Mm-hmm. So that also has evolved over time. Yeah. So yes, the market has evolved. And basically, it's the availability of financing, both for the consumer who wants to buy a home, as well as the developer who wants to construct. Mm-hmm. With more and more access to financing, the market will grow and continue.
Yeah. So it's been a growth in the demand as well as the supply is what, if I understand what you're saying correctly, right?
Well, demand was always there. But because there was no supply of financing, mm-hmm. the supply of real estate was slow. Mm-hmm. And because of which the prices were high.
Yeah.
And because prices were high, affordability was not there.
Yeah.
Over time, with income levels going up, with financing available at both ends for developers as well as for home buyers, mm-hmm. The supply increase. And with supply increasing, the prices, kind of are more affordable. Because typically for home buyers, look at the cost to income ratio. Mm-hmm. Cost of a home of versus the annual household income. That ratio, when it comes down, means it's more affordable.
Of course.
That's what it is.
But I mean, I presume that's the story with like residential real estate. Commercial real estate, I would imagine it's seen a similar sort of boom because of, the growing incomes, growing expenditures. I mean, is my assumption on that correct?
So see, commercial real estate, if you see, as an asset class, was only with the HNIs initially. And with the liberalization, a lot of the multinationals came into India. And then we started seeing multinationals occupying real estate, and we are seeing the separation of ownership and use. Earlier, people would buy commercial for their self-use. But over time, post liberalization, we're seeing more and more institutional investors into real estate who want to hold the real estate for owning the rental yield, but they rent it out or lease it out to commercial occupiers for their office space. So that's how commercial has evolved over time. And today we even have REITs, which is real estate investment trusts, which own office space and they rent it out to Indian and multinational companies. And the REITs get rents, which in turn are distributed to the investor. So that's also a class which has developed over the last couple of years.
Yes. But a fundamental question from an amateur's perspective. So what I understand about real estate is there's two sources of return. One is your rental income, your cash flows, and the other is your capital appreciation. How important are, I guess, both or either of those cash flows, and what's more critical to generating returns on real estate investments? Is it the same with residential and commercial? That's
a great question, Laura. Actually, if I talk about rental yields, they're very different for residential and commercial. The rental yields for commercial would be anything, it's linked to the interest rates and risk weightage you attach. So it could be anything from 9 to 11% would be the rental yield for commercial real estate, depending on the property, the location, the quality of the commercial office space. Whereas for residential, generally the yields historically have been very low in India, and they would range anything from 2% to 3.5%, 4%. So the rental yields for residential have always been low because it was always a market for actual users, and the investors who invested in residential real estate were doing it more from a capital appreciation perspective.
Got it.
Because 2.5 to 4% rental yield on residential is not even the prevalent interest rate. From a return perspective, one would want capital appreciation rather than only rental.
Yeah. But that's not necessarily the case, I guess, from my own understanding. It's not necessarily the case with the rest of the world. Like, for example, the UK, rental yields are a huge component of the return on a real estate investment, particularly residential real estate. I mean, why is this dichotomy between India and the rest of the world?
India always has had low residential yield, and because the yields are low, it becomes commercially unviable to develop residential real estate for renting. Because if your cost of capital is anything in double digits or more, low to high double digits, why would you, incur a cost, whatever your cost of capital is, 10% or 20% or whatever it may be, why would you incur a capital cost and then get a rental yield of 2.5 to 4%?
Yeah, that doesn't make sense.
So it doesn't make sense, and therefore, the rental market for residential has not developed, and it will take some time, or it's unlikely to develop in the foreseeable future unless the rents go up substantially and the cost of funds come down. Only when there's a positive yield or carry, that's when people will look at rental for residential as an investment property. Otherwise, it's always for capital appreciation or self-use.
Sure. But I mean, maybe another question. Now, for example, Mumbai, where we live, there seems to be a much more active rental market here, at least in this city than other cities, from what I understand. Do you see this market for rental residential use growing in the near future, maybe in tier 1 cities, or is this a Mumbai only phenomenon?
No, residential rentals happen across the country. So even if you go to Bangalore or Pune, there is a large stock of residential real estate, which is available for rent. Only thing is there are no institutional residential lenders, or maybe lenders is not the right word. No, institutional lessors, because the rental yield is low. So there are individual owners who may want to rent out their residential properties. And this is because the rental yields are low. And it is across the country. You get residential property on rent across the country. It's not a phenomenon in Mumbai also. And over time, the rents appreciate due to demand and supply.
Yeah.
So it's not linked to Mumbai alone. It's all over India you get residential properties on rent.
Yeah. So I guess maybe another interesting artifact that I'd love to understand more about. Mumbai is obviously by far the most expensive city in the country to buy real estate. What are the key markets? What's driving this sort of regional difference? And do you see there being some sort of an equalization, or maybe let's talk about the regional differences in real estate across the country?
You see, Mumbai has always been expensive, and if you compare it globally, New York is more expensive than other US cities. London is more expensive, so on and so forth. That's because it's a financial capital. That's one of the reasons. Second is also, if you see the topography, it's an island city. So it's not possible to grow Mumbai. But with the infrastructure development, mainland will get connected to the Trans Harbour link, so on and so forth. So with that, there will be more supply. And to that extent, prices may not appreciate or may not be that unaffordable with more supply coming in. Whereas if you see rest of the cities like NCR, Bangalore, Pune, they are not constrained by being an island city or those kind of constraints. So to that extent, the supply has always been more. So that's primarily the reason for the difference for Mumbai being more expensive than other cities.
Okay, so there's really no hope for rents in property price in Mumbai to come down anytime in the near future then, is it?
I think it's not about coming down, it's more about the affordability. And to that extent, Mumbai has become more affordable over time because the interest rates were low and the property prices had not gone up as compared to the income levels which were going up. And to that extent, affordability in Mumbai has improved over time. Yes, of course, but compared to other metro cities, it is more expensive because of the geographical reason which I mentioned.
Yeah, of course. Yeah, of course. So I guess moving away from what the present situation is, the past situation has been like, where do you see Indian real estate going for the next 10 years, 15 years? What's going to drive, the major market movements and what are the big trends to look out for?
So I think I see a very bright future for Indian real estate because with income levels going up, growing urbanization, I expect within the next 10 to 15 years, almost 50% of India will be living in urban locations. So the smart cities and the growth of the cities is going to be phenomenal. And with the rapid growth in urbanization, there will be demand for housing in all the major cities of India. That's going to be one key driver. Secondly, this with income levels going up, people always aspire to have bigger or better homes. So, and also there are a large number of first-time home buyers. If you see a lot of the graduates who are joining the IT or the tech sector, they want to buy a home once they settle down and they want to kind of start a family, so on and so forth. So the demand for housing has been and will remain strong. For other classes of real estate, whether you see commercial, within commercial, if you look at retail or office space, I see good demand for that also because the Indian economy is one of the fastest growing economies in the world. And with that, you will need more office space. There are more multinationals setting up offices in India. Yesterday you read that Apple is setting up one more plant in India. And, so with more and more companies expanding their operations in India, there will be demand for commercial space also. So there's a good potential for commercial also. Similarly, with these two asset classes, you will need shopping. Retail also will grow. So in that sense, real estate is very closely linked to the economy. And even if the expected rate of growth is slower than what people expect. A 6-7% growth rate is still expected, and with that, real estate will continue to grow, and all segments of real estate will see growth. So I see good potential for real estate in the next decade, or maybe more than that.
Yeah, no, I completely agree with your assessment. Ultimately everyone wants a bigger and bigger house, a bigger and nicer office, more shopping space. So I can't see the demand going down. But another interesting trend that I guess we see in the economy that I want to know if it's true for real estate as well. A lot of growth in tier one cities it's already happened. We've reached where we've reached, but a lot of the additional growth that we expect to come from India, we expect to see from tier two and tier three cities, particularly income growth in those cities, the corporatization of those cities as well. So what's the difference in the market dynamics for, say, tier one cities or tier two, tier three cities, and how pertinent is that?
So I think both are growing. Tier 1 cities also are growing, and tier 2 cities are also growing. It all depends on the commercial activity which is prevalent, which will see the growth. So I would say it's not the top 6 or top 7 cities of India which are growing. There are top 20 or top 30 cities of India which are growing. Yes, the size and the volume would vary depending on the commercial activity prevalent. That's what I would see. And I think the commercial development is a key to the growth of the city. More factories or more offices, in that sense. So that's what's going to drive the growth.
No, fair enough. I guess to maybe go to a different side of this equation, right? So the market, the demand is expected to grow. And there's obviously a number of key players in the real estate market that are attempting to offer supply. But, the big elephant in the room is the government and how they move and how they impact the real estate market. And, I'll sort of list out a couple of really key pieces of regulation or government moves, and I'd love to sort of get your thoughts on them. Obviously, RERA, or Real Estate Regulation and Development Act, and maybe even demonetization. Are there any sort of government measures that can help or hurt the real estate market? Are there any government measures that have helped or hurt the real estate market? How can the government support this growth?
So I think government is doing a lot to support the sector, because it's one of the real estate is the largest employer after agriculture. So, and it supports so many industries, because in building a building or constructing a building, there are so many various materials and supplies which come in. So it generates a lot of employment. So government has been extremely supportive, and housing for all is one of the policies of the government, which is giving a lot of impetus and support to the sector. One of the regulations which the government introduced, as you pointed out, is RERA, Real Estate Regulatory Act, because the largest purchase which a consumer makes in his lifetime is purchase of a home. And RERA seeks to protect the rights of the consumer. So it's a very good regulation, and it kind of ensures that the consumer does not lose out in purchase of a home or purchase of a real estate asset. So the government has doing its bit to kind of support the sector too. And I think it will continue to do so, because it creates so much employment, and also it leads to overall growth of the economy, because it has a multiplier effect.
Of course. I think one thing that I always found very interesting is a lot of China's growth over the last 10-15 years has been driven by the construction sector. You have these, I think, Evergrande Group and several others that had a lot of access to government officials, but also a lot of government funds that drove that growth in the Chinese economy.
So I am not an expert on Chinese economy, but I know that a lot of financing in real estate was through government funding in China, which is not the case in India, which I believe is more healthy, because it's more market driven, and there are actual investors who are taking up real estate decisions based on commercial evaluation of the underlying real estate. It is not linked to pure government initiatives. So to that extent, it is more market driven, which is a good thing. from a economic standpoint.
Yeah, even from a capital market standpoint, you don't want to have that whole boom bust cycle that China had, because if the market's making decisions, it's the hope is that it doesn't make terrible decisions.
See, it's difficult to predict the market.
Yeah.
But markets always are subject to cycles, so we can't say what's going to happen in the future. But generally, the real estate sector looks fairly stable, and I think it will remain irrespective of what happens, globally, because the sector has kind of performed well, and I believe it will continue to perform well.
So, if I'm a retail investor, what's the best way for me to get exposure to real estate? Obviously, buying a home, buying some real estate is a really large purchase, and maybe there's more emotion than a commercial consideration. But if I'm trying to account for some real estate in my investment portfolio, what are the best ways to do it?
So for an investor who wants to get an exposure to real estate, as you rightly put it, buying a home is buying a residential property is a fairly expensive proposition. And one would look at it from an investment standpoint, provided there is capital appreciation, because as I mentioned earlier, rental yields are low. So that's one aspect one needs to consider. Also, there are other financial products which are available. There are a lot of mutual funds which give exposure to the real estate sector, either in terms of real estate companies or companies which are ancillary to real estate, which could be cement or steel or sanitary ware, so on and so forth. Another option available for investors is to invest in real estate investment trusts. These trusts invest in offices or retail space, so on and so forth. And they are a kind of a proxy to investing in commercial real estate through the REIT route.
Yeah.
So these REITs own office space, they collect a rent, and they do quarterly payout. So these are some of the options available for individual investors to get an exposure to real estate.
So I was looking at REITs actually quite closely, and very interesting that India seems to only have 3 or 4 REITs. But if you look at, say, the US or the UK or Europe, they have dozens and dozens, and they have, different types of REITs. They have residential REITs. They have, a whole variety of REIT-based products. Why are more real estate developers not interested in going down the REIT route?
I think REIT is a fairly recent regulation. It has come in the last 2 or 3 years only. And I think it's quite commendable that in such a short span, we already have 3 REITs.
Okay.
And there are a couple more which are in the pipeline. So I think it's over time. US probably had the REIT regulation for decades. And for India, it has been in existence only for 2 or 3 years. So even for once a REIT is, regulations are in place, it takes time for it to kind of be implemented. So I think we've moved very fast, but over time, it will kind of grow very rapidly, and there will be more REITs in India too, as you see in other developed markets.
Of course. Yeah, no, that's the hope, right? Yeah. Now, one wild card question that comes to my mind. You've been investing in real estate for about 18 years, if I'm not mistaken. Any interesting stories, any, great anecdotes? Maybe what was the best investment you ever made in the real estate space, or something that surprised you?
So, I mean, basically what really surprised me, we invested in a commercial real estate, and the rents were what they were. But with the growth of the economy and with the reduction of interest rates, the rents went up rapidly. And also with the reduction of interest rates, the cap rates went down. So the rents moving up and cap rates moving down, we made a very good return on the investment. So I mean, some of the kind of learnings is that when the economy is growing and you've invested in a good asset with a good partner, you will make good money. So I mean, that's one of the takeaways from being a real estate investor.
Yeah. What does a good real estate asset look like, out of curiosity?
I mean, a good quality construction, good location, right specifications. That's what I would look at as a good real estate asset. But again, it varies. You're looking at residential or you're looking at commercial, so on and so forth. again, going back to my previous comment, if one doesn't want to get into too many complexities, one can look at investing into the financial product space, which are the mutual funds or the REITs.
Yeah. All right. Well, anything else that you'd like for retail investors to know about the real estate market to maybe encourage them to get into that, or maybe create some excitement around it?
No, I think the Indian consumer is fairly knowledgeable, and Indians have understood and benefited from investing in the real estate sector. So I don't think there's anything I could add further to that. But the market is kind of growing, and there are more regulatory, checks and balances in place, which protects the consumer. So to that extent, that augurs well for the consumer or the investor, which I think is very good, because only when your rights are protected, you kind of feel comfort, and when you have comfort, you will invest.
Yeah.
So I think the right ingredients are there for the consumers to kind of invest in real estate, and I think it will continue to grow as a sector.
All right. Well, one thing I've definitely learned from you through this podcast is that the Indian real estate sector has a really bright future. And, on my side, at least, I'm certainly going to consider investing in REITs or real estate mutual funds or something of that sort, because, it's
I don't much, but please consult your financial advisor.
Of course. And, no, thank you so much for coming on the podcast.
Thanks, Yash. Yeah, good talking to you.
Yeah, I really appreciate all the knowledge and information you've shared with us today.
My pleasure. Thank you.
Yeah. All right.